today we will cover some of the hot topics that we are all here for. What's happening to India, what's happening to America, what's happening to the dollar, what's happening to tariffs, and where are we, and so on and so forth. So shall we start with this one question that I keep hearing about? My clients very frequently ask me, is de-dollarization happening? Is that a reality, or is it just a figment of somebody's imagination?
It is happening very glacially, very, very slowly. And the reason why is simple. Tina, there is no alternative. And the potential alternative to the dollar is the euro. Unfortunately, the eurozone is too dysfunctional. And that is why when Donald Trump met with von der Leyen, President of the European Commission, he essentially humiliated her and more or less forced through a trade deal that the Germans were livid about. Basically, it gave unfair access to the European markets to Americans, and Europeans would be paying a 15% tariff. In fact, 15% is actually better than what they were receiving earlier. They were looking at a 25% tariff on cars and car components, which is, of course, Germany's biggest export to the US. So in that sense, it wasn't such a bad deal, but the Germans were still very angry about the nature of the deal, a very unfair deal. But if Europe could speak in one voice, if Europe had a fiscal union, if they had something closer to a political union, the euro would be a much more credible currency. Unfortunately, the euro is not a very credible currency. It's not a credible alternative to the dollar because the Europeans are too divided. Now, the other alternative people talk about is the Chinese renminbi. But the Chinese renminbi isn't even a convertible currency. So you can't just walk into a money changer anywhere in the world and change renminbi, get renminbi in exchange. So, and the same applies to the rupee. You know, people talk about the BRICS currency. Among the BRICS currencies, the only one that is convertible is the South African rand.
Strangely.
So you have the South African rand as a potential alternative. See, if we are going to have a BRICS currency, then the BRICS members will have to give up autonomous monetary policy. So if we decide to make the renminbi the BRICS currency, then our interest rates will be determined by the PBOC. Is that something that we are willing to put up with? I don't think so. And so a BRICS currency is very unlikely to emerge. What could emerge over time is that the rupee, the Brazilian real, the rand, the South African rand, are used much more in trade within the BRICS region and the broader global south. And that over time would make some of these currencies credible. But if the Indian rupee, for instance, is to become a reserve currency, we'll have to give up capital controls. And if we give up capital controls, then that introduces the potential for a great deal more volatility in the rupee. And that is something that we are not yet willing to do, especially given that we have substantial amounts of public debt, we have very large fiscal deficits, and that makes for substantial volatility, potentially, if we completely open up the capital account. China, the reason why China hasn't made the currency convertible is quite interesting because the Chinese renminbi is actually included in the SDR. The SDR is an IMF-issued artificial currency in which the dollar has the biggest weight.
Right.
But the renminbi was included in the SDR mechanism in, I think it was 2016. And in the lead up to that, either 2016 or early 2017, in the lead up to that, China was liberalizing its capital controls. within 2 weeks of the renminbi being included in the SDR mechanism, China clamped down and sharply increased its capital controls. And those capital controls have stayed in place and, if anything, become even, even more controlling. Because China has massive capital flight all the time. This is the interesting thing. We think of China as being this great economic behemoth that is about to take over the world. But the Chinese themselves have very little faith in their own currency. Interestingly, if you look at China's foreign exchange reserves, they peaked 11 years ago. In June of 2014, China's foreign exchange reserves reached $3.99 trillion. That's the biggest hoard in history. No country has ever had close to $4 trillion of foreign exchange reserves. In the subsequent years, China has had large trade surpluses every year. Last year, the trade surplus was $925 billion. So if you have a trade surplus of $925 billion, you should basically be seeing an increase in your foreign exchange reserves, unless there's a lot of capital flight. And in fact, or you have a lot of services outflows. Okay, now if you look at the current account surplus for China, it's a little bit smaller. It's about 450 or so.
But still a surplus.
$450 billion, still a surplus. And yet, China's foreign exchange reserves have declined every year, except perhaps one, in the last 11 years. And they are now at about 3.2 trillion US dollars. So, foreign exchange reserves are down, despite the fact that they have massive trade and current account surpluses every year, which basically shows that there's a massive amount of capital flight from China. And in fact, there used to be stories that, if you're in California and you go to buy a house, the California resident has done his calculations or her calculations for the amount of mortgage they're going to pay, depending on the price they offer, etc. Suddenly, a busload of Chinese arrive. And they come off the bus with suitcases. They say, what's the price of this? 1 million? Okay, I'll offer 1.1 million. Here's $1.1 million. Suitcase open, dollars available. And these sorts of stories occur all over the world. In Sydney and Melbourne and Singapore. In fact, in Singapore, there is now a 65% stamp duty that foreigners must pay when they buy a property. If you buy a property, immediately, you buy a property for, say, $1 million, you pay $1.65 million because there's a 65% stamp duty that is charged to foreigners, mainly to deter the mainland Chinese who are otherwise willing to buy anything, regardless of the price. So essentially, and interestingly, the primary source of the capital flight from China is Communist Party members. Communist Party members basically can flash their party card and their suitcases will not be checked. So they basically have their hand baggage and their suitcases full of cash. They literally take cash out of the country in suitcases. And so the renminbi cannot be a credible reserve currency because the Chinese themselves don't have faith in it. And if China liberalizes the capital account, there'll be even more capital flight than there already is. They have very tight capital controls, but money is still flowing out. And so that makes it very difficult. It in fact makes it impossible for the renminbi to become a reserve currency. Now, what is interesting is that if you look at the history of reserve currency, until about 1925, the main reserve currency in the world was sterling, the British pound. Because after, if there was a reserve currency before that, perhaps it was the Dutch guilder. The Dutch were the major financiers in the world in the 16th century, 16th and 17th centuries. From around that time, from about the late 17th, 18th century onwards, the sterling basically had become the currency, the main currency for international exchanges and international trade. And so, if there was a world reserve currency, it was sterling. And sterling was, in most of those periods, somewhat linked to gold, but not always. It was usually a flexible exchange rate. For some periods, it used to be fixed, but other times it was flexible. And the point was that it was the main currency of the world. Then, during the First World War, the British, of course, were heavily involved in that war. America only entered the war in April 1917, and the American mainland was unaffected by the war entirely. So after the war, and also, of course, it was at that time that oil had become the major driver of the world economy. The first country to actually discover massive amounts of oil and to exploit it was the United States. The United States had about a 20-year lead on oil exploration relative to anybody else. The second, by the way, was Russia. So the United States, starting around the 1865 sort of period, had become a major producer of oil. By about 1885, 1890, Russia. But the automobile, the car, had emerged as the major new innovation at the beginning of the 20th century. And the Model T Ford was introduced just before the First World War. And by the end of the First World War, America was the dominant economy. And the pound sterling had depreciated sharply against the dollar during the period from 1914 to 1925. And then that rather foolish man, Winston Churchill, then became Chancellor of the Exchequer. That is the Deputy Prime Minister, effectively, of the UK. And he decided that sterling has got to be the most important currency, and we've got to put it back up at the exchange rate that prevailed before the First World War. And so he caused an appreciation of sterling by almost 40%, which resulted in a complete collapse of British and British Empire manufacturing over the next 1 year, because they had caused that massive appreciation of sterling. And we think of the Great Depression as having started in 1929 with the Wall Street crash, but in fact, in the British Empire, the Depression began in 1926, and it was not just Britain, but even everything that was part of the empire suffered from it. And I don't think British manufacturing has ever recovered from the blow that Churchill dealt it in 1925. So, as a result of that, the dollar emerged as a more important currency. It wasn't immediate. It was only after the Second World War that the dollar became the more prominent currency. Of course, before that, you had the Smoot-Hawley tariffs of 1930, and you had beggar thy neighbor policy. So you had America imposing a Smoot-Hawley tariff, which was as much as 80% tariff on Japanese exports to the US, and fairly high tariffs on everybody else, an average tariff rate of about 30 or 40%.
And that didn't work out too well either.
And it didn't work out well because everybody retaliated. So you had this so-called beggar thy neighbor devaluations. Different countries began to devalue their currencies or to put various other retaliatory tariffs against the US. And the fear was that this time around, with Trump, the same thing would happen. That he would impose tariffs, everybody would retaliate, and we'd have a collapse in the global economy. Instead, of course, we have the spectacle of all the European leaders sitting like school children listening to this tyrant speaking from behind the resolution desk at the White House. So now, far from retaliation, most countries have kowtowed, and that has ensured that there is really no alternative to the dollar. De-dollarization is a very glacial process. It is not about to happen. Although one keeps hearing about it, I don't think there is a credible alternative to the dollar. And so for now, the dollar is going to be preeminent. But it's also worth noting that there is no country in history that has ever been as dominant as a manufacturer in the world as China is right now. China is completely dominant in almost every form of manufacturing. The closest thing to this was Japan around 1990. Those of us who are old enough to remember 1990 would probably remember that at that point, almost every significant camera was Japanese. You had Yashica and all those names, various other brands.
Konica, Canon, whatever, all of them were Japanese.
All were Japanese. Watches, Seiko watches were ubiquitous. Cars, in America, it was such a situation in around that time, 1990. Toyota and Honda were not only dominant, but there was a Toyota car that was rebadged as a Geo Metro. It was produced in the same factory in Lafayette, Indiana. It was sold as a Geo Metro by GM, and it cost about 20% less than the Toyota Corolla. It was actually just the Toyota Corolla with a different name. Only thing is that GM could not say this is a Toyota Corolla. They were calling it a Geo Metro. Geo Metro never sold. People just bought the Toyota Corolla. In America, people preferred Toyota simply because after-sales service was so good. Quality, of course, was good, but the after-sales service was so much better. They preferred that. So Japan was dominant, but it was, today, if you look at steel, aluminium, cement, China for the last 10 years has been producing more than half of world production of all those three things. If you look at something like solar panels, about 70% of world production is in China. If you look at EVs, electric vehicles, the newest technology in cars, more than half of world production is in China. This degree of manufacturing dominance is unprecedented. Possibly America, if you think about, perhaps the First World War is somewhat similar. If you think about it then, cars were a new technology, new toy, and America was definitely dominant. But with that exception, I don't think there's been anything quite like the Chinese dominance of manufacturing. And so, if China could get its financial system right, then the renminbi could become an alternative. The good news for us as Indians is that China's financial system is a total mess. And so, it is impossible for China to move towards a convertible currency anytime soon.
Is the financial system broken because of the government, or is it because the shadow banking system which goes beyond and does a lot of bad credit?
Well, not just shadow banks. It's basically China has the most dysfunctional financial system in history as well. And the reason why China has become the dominant manufacturer is because its banks lend as if there is no tomorrow. And the banks are generally government owned. So if you think about the Chinese banking system, most people don't realize this, but China had the worst banking crisis that any modern economy has ever had. In the year 2003, 22 years ago, in June 2003, China had NPLs in its banking system of more than 50%. Standard & Poor's put out a report saying this in June 2003. And that report vanished from the face of the earth within 48 hours. Why? Okay, I'll come to the why. But the interesting thing is, you cannot find it anywhere. The only evidence that report, I know that this report was
made
published because I attended a presentation by S&P on the day of its publication. And those who work at S&P and are now very senior, about to retire, they remember. So anyway, they remember, but they're not allowed to talk about it too much, except in private. Now, what happened basically is that they said it was 50%, and it was made to vanish primarily because China was then just emerging. China was very important to American corporations. It was very important to Wall Street banks. And so, if China ordered something, S&P complied. And S&P made a lot of money in China. Now, India, by the way, S&P makes almost no money in India. Because, India has never issued a sovereign bond. Outside the country. No dollar bond or euro bond has been issued. And so, the sovereign rating for India is a theoretical rating. But, China was a client of S&P's. Very important client of S&P's. And so, when they ordered that the report should vanish, it vanished. And it happened in 48 hours. So, the only evidence now, if you look it up, you look for New York Times report saying S&P says China has 50% NPL. That can still be found. You can find a New York Times report and you can find a Wall Street Journal report. Or at least when I last checked, which is about almost a year ago, you could find it still there. Now, the point is that it was made to vanish. But what happened then was perhaps even more interesting. Over the next 3 years, the largest Chinese banks, now, so they have 50% NPLs. Now, typically, banks have a capital adequacy ratio. In those days, it used to be 8%. So you have $100 of assets, you must have $8 worth of
equity backing it,
reserve backing it, equity backing it. So, and then now that's been raised between 12 and 20% in different countries. But the point is that you have to have that equity backing. If NPLs go to 15%, the banking system is bust. If it goes to 20%, as happened in Thailand in 1997, the system is finished. If it goes to 50%, you're beyond repair.
Yeah.
I mean, you're no longer a bank. Anyway, so what did China do? China then took 45% of all the bank's loans, removed them from the banks. So basically, you only had 5% NPLs left on the bank's books. And then it offered these so-called cleaned up banks for IPOs. But before the IPOs, Goldman Sachs, Morgan Stanley, HSBC, Temasek of Singapore, and UBS took stakes of 10 to 12% in each of the 5 largest Chinese banks, thereby signaling to us normal investors that these banks are safe. So the way I put it is that global capitalism saved the communist banks. And then the IPOs were very successful. Now, once the IPOs were done, the banks were recapitalized. So they were recapitalized by us, foolish investors. I didn't participate, of course, but foolishly, I didn't participate. Frankly, had I participated, I would have probably gotten a lot richer. But the point is that
It required capital.
There was a capital infusion. The banks were recapitalized and strengthened, and they went on a lending spree. Now, the type of lending spree is remarkable. In 2008, at the time of the global financial, the so-called global financial crisis, the total amount of money supply in China, M2 money supply, was equal to about 6.6 trillion US dollars. Today, China's M2 is about 44 trillion. US M2 at that time, in 2008, was 8.5 trillion. It is now 21 trillion. So, China's money supply is double the size, more than double the size of US money supply. Although the US economy is about 40% larger than the Chinese economy.
True.
Which is pretty remarkable. Now, I call this the greatest monetary expansion in history. No country has ever had a monetary expansion of this magnitude. From 6.5 trillion to 44 trillion over this period of time.
So it's not been a productive expansion.
Now, the interesting thing is that, you see, the monetarists, Milton Friedman, and the monetarists would have said that you cannot, if you expand your money supply too rapidly, you will eventually get a lot of inflation. And that is true in almost every country in the world. In China, there's been no inflation, there's been no significant inflation over this period. Why? Well, the reason is quite interesting, because in most of the world, if you expand money supply and credit too much, then what happens is that most of that credit goes towards consumption. In the US, in India, in Britain, in Japan slightly less so, but even in Japan, most of the new money created will go towards consumption. In China, most of the new money created goes towards investment. So you've had this huge expansion of credit, which has funded a massive expansion of capacity. So if you have industrial capacity increasing all the time, then instead of prices going up, prices will actually go down. So China, for most of the period since 2008, has had producer price deflation for about, it's for about 35% of the time, 35% of the months since September 2008. China has had producer price deflation. It has had consumer price deflation for only about 10% of the time. But nonetheless, instead of having hyperinflation or high inflation, they've had deflation. So this defies monetary economics. And unfortunately, monetary textbooks and macroeconomics textbooks only focus on the US economy. They don't focus on the second biggest economy in the world, because the second biggest economy in the world defies a lot of the laws of economics that we know, because it's a unique structure. And the unique structure is that the consumer is suppressed, there's forced saving, and you have a system in China where there is a disincentive to consume, partly because for 40 years you could have only one child. And so since the family could have only one child, they saved a lot to ensure that the child would get the best possible education. And the best possible education meant going to the US also. This is part of the capital flight too. So they would all save for this. There is no insurance, there's no publicly available health insurance, there's no real social security system. So all of this contributed to high savings. Some of it was forced, but some of it was also voluntary, and very high savings rates. So high savings funded investment and capacity creation like no tomorrow. So interestingly, in March 2007, even before the global financial crisis, the then premier of China talked about, his name is Wen Jiabao. Wen Jiabao said that our economy is unsustainable and it cannot continue in this way, and particularly because we have overcapacity in almost every industry. They had overcapacity at that time in steel. China was producing 400 million tons of steel in 2007. No country prior to that had ever produced more than 125 million tons of steel in a year. So 125 was where China reached in the year 2000. In the year 2000, world steel production was 840 million tons, of which China produced 125 million. By 2007, China's production had gone to 400 million tons. And this is when Wen Jiabao said, no, we've got to stop. Then the global financial crisis hit, and in the year 2009, something called total social financing, which is the total amount of credit in the system, increased 99% in that year, 1 year. And from then it continued to grow rapidly. So the consequence of that was that China's steel capacity went from 400 million tons in 2007 to a peak of 1,053 million tons in the year 2020. Remember, world production of steel in the year 2000 was 840 million tons. China alone, by 2020, was producing 1,053 million tons. India is the second biggest producer of steel in the world. This year, last year, our production was 147 million tons. We are the second biggest.
After 1,000.
But, 147 is already a very high number compared to other producers in history. Japan never got beyond 125 million. The United States, at its peak, was producing about 110 million tons of steel. India is 147. So we are actually doing a lot. We're producing a lot of steel compared to the history of the world. But we are nothing compared to the biggest producer, which produces 7 times more than us. Second biggest is 1/7 the size of the biggest producer. And the same thing applies to aluminium. We're the second biggest producer of aluminium in the world. But China is about 6 times, 7 times more than us in terms of annual production. So this is
exceptional.
Now, you see, so in some senses, Trump is the first American president to understand that this is untenable and unsustainable. All he's saying is, maybe in a roundabout way, he came around to this conclusion. So when he first became president in 2017, he was going to go after China. Unfortunately, this time around, the Chinese have discovered that they have some tools to hit back at Trump and at the Americans. That tool, of course, is rare earth minerals. And rare earth minerals are very polluting, first of all. They're very polluting. So most of the rest of the world has stopped mining them and stopped refining. So almost all the rare earth mining and especially refining happens in China. And so China has been able to retaliate using that tremendous weapon that they have. Rare earth minerals are used in a lot of things, including computers. Generally, in most semiconductors, you need some rare earths. Electric vehicles need rare earths. Normal cars also need rare earths. So you need small amounts, but without them, you can't get most types of modern production going. And so they've had that, and they've used that as a retaliatory tool against the United States, and Trump has caved in. So that, unfortunately, is the story there. But the original insight that Trump had was right. It is inappropriate for the rest of the world to trade with China as if it's a normal country. In a normal country, if you have excessive lending going on, then a company, then you will eventually stop doing it because you'll have problems with the last few borrowers. They won't be able to repay. Then you stop lending. In China, what used to happen was that particularly state-owned enterprises would borrow from a bank, wouldn't repay, they'd go to another bank, and they'd get new loans. They'd use the new loans to repay the old loans. And this is called evergreening. So that is why the size of the money supply in China has increased so much, and China has built overcapacity. Now, so we know a lot about the real estate overcapacity in China. You know, Evergrande was the largest property developer in China. It went bust. Then the next largest one, Country Garden, is about to go bust. So the property sector is a major reflection of the financial system's weaknesses today. But the reality is that beyond this, there's an even bigger problem, because you've got overcapacity in every industry. And the nature of the overcapacity is this, that since there's overcapacity, there isn't enough demand in China for that capacity. So China starts exporting. So if you just think about, say, steel, China basically reached the limit of its steel demand in 2011. So 14 years ago. And it then began to export. World steel trade used to amount to about 50 million tons before 2011. In the next 4 or 5 years, that went to 250, 300 million tons a year. All the extra stuff was from China. So world steel prices crashed, and the steel industry in Europe was rendered uncompetitive because world steel prices had come down and China was dumping. Now, what is the meaning of dumping? The term dumping in international trade refers to selling your output below the cost of production. And that is by definition what China has been doing in almost all these industries, steel, aluminium, etc. It has too much capacity at home, so it just sells the excess capacity in the rest of the world. So the rest of the world needed to put in place anti-dumping duties. And over time, actually starting towards the end of the Obama administration, in about September 2016, even the Obama administration began putting anti-dumping duties on steel and aluminium from China. And now pretty much everybody has started doing it. The Europeans have done it, India does it, etc. But if China, if the United States doesn't allow Chinese steel and aluminium to enter the US, then
goes to the rest of the world.
And that is still putting pressure on steel. Now, what is interesting to me, though, is that over the last 4 years, the only country in the world only country among the top 10 steel producers that has increased production every year is India. I pointed out that it was 1,053 million tons in year 2020 was the production by China. China's production of steel last year was 1,007 million tons. So it's come down. But 1,007 is still a massive number, but it's coming down now. India's production in the year 2020 was 99.8 million tons. It's now 147 million. So India has increased. India is the only one that's increasing its production each year because India is seeing a significant build out of infrastructure. India still needs a lot of housing capacity. All of that generates substantial demand internally, and so there is a
Does it make sense for a capital-starved country like India to then import the steel at a lower cost from China rather than put up factories here?
Well, yeah. I mean, in that sense, it makes sense for the rest of the world to stop producing and let China produce, right? I mean,
but what is the
pure economic logic?
Yeah.
Pure logic of what would benefit the consumer, that probably makes sense. Everybody should stop producing, just let China produce. And let the Chinese depositor bear the bill. Finally, it is a Chinese saver who is funding the whole thing, who's holding the bag at the end. But we discover now that if you allow one country to have a monopoly on anything, that becomes problematic for the rest.
For the rest of the world.
This is where geoeconomics or geopolitics comes into the story, and so it makes sense. Now, are we capital starved? I don't think we are that capital starved. I mean, we are capital starved relative to the amount of labor we have. So we are a labor abundant economy still, and we therefore should be doing much more labor intensive manufacturing in this country. We don't do it for a variety of reasons. The most important to me is that we had all these terrible small scale reservation policies in the past, and we still have priority sector lending that goes to smaller companies. So we have an incentive to keep our companies small, especially in labor intensive manufacturing sectors. Our former chief economic advisor, K. Subramaniam, talked about this. He called this the phenomenon of a dwarf company. So if a company, we have a lot of incentives for lending to SMEs, which is fine. But the SME cannot be an SME forever. The incentive stays only if you stay small. If you grow big, if you become a little bit bigger, you lose the priority sector lending. So, unfortunately, these these textile manufacturers in India, garment manufacturers, don't grow very large because they lose access. So I've spoken to some of them. I said, why do you have so many? You have 40 factories. I said, no, it's fine. I'm happy. I'm making decent amount of profit in all of them. So I said, you should consolidate. That we might not get PSL, priority sector lending. We won't get that. And so we keep it going. And so it is perverse. We are not taking advantage of scale economies that would reduce the unit cost of production, and losing out on the likes of Bangladesh and Vietnam in a lot of labor intensive manufacturing.
So all this actually exposed the vulnerabilities that all the countries have. Just like India, most of the other countries' weak points were exposed with this round of tariffs and disruptions, right?
So now if you look at the tariffs and disruptions by Trump, Trump is a rather unique figure. He is exposing the way America has always ruled the world since the Second World War. Other presidents did it in a subtle way. They didn't do it so openly. Trump is now doing it on Truth Social and on TV on a daily basis. He's showing us his venality and America's selfishness in full view of the world, which is unfortunate, but that's what it is. So the Trump tariff situation is arbitrary, but I think the original idea was right. The original idea was that you needed to deter Chinese dumping. That's fine.
But they are the ones who are fine.
Now they've got, now interestingly, China was able to retaliate.
Yeah.
So he raised the tariff to 150%, then quickly brought it down to 30%. And now it's still at 30%. So he responds to power, like any politician does. And the power game that China has played has worked very, very effectively. The other thing that Trump responds to is corrupt deals. So if you bribe his family, you're in good shape for a while at least. I remember in the first year after he became president, 2017. Throughout that year, the Chinese renminbi appreciated 10.5% during that first 12-month period. That is a nice kind of bribe of a sort. And Ivanka Trump, Donald Trump Jr., etc., Eric Trump, they started getting various business deals in China. So that held off action by Trump for the first year. Then in March 2018, despite all this bribery, he started acting against China. So he started acting against China, but he gave them a chance. He said, okay. Then in December 2018, he finally said, oh, you guys are taking me for a fool. And then he started imposing those tariffs. And the tariffs have had an impact. So if you look at China's share of US imports, in March 2019, they had peaked at about 22.5%. Now they're about 12%. So China's share of US imports has declined sharply since Trump imposed those tariffs. So it's working. It is doing a little bit of, it's having some impact. And I also note that this year, United States steel output is up for the first time for about 6 years. First time in 6 years, US steel output is increasing. I can guarantee you that US car production, especially of Ford and General Motors, especially Ford, will go up because 70% of Ford's production is in the United States. The tariffs will be a big benefit to Ford. So Ford and General Motors will benefit. To some degree, Toyota will also see some benefit because Toyota has about, about 60% of what it produces in the US, or what it sells in the US are produced in the US. I talked about Lafayette plant, Lafayette, Indiana plant, even in 1990 it was there. So there are many others now. So they have that. But the point is that the tariffs unfortunately will work. I mean, let's not be, if you think about it, going back to history, what we don't realize is that the first industrial revolution, the British industrial revolution, was based on a complete ban on imports of Indian cloth into Britain. From 1705 onwards, for 55 years before the Industrial Revolution in the UK began, they banned imports of Indian cloth. And then they banned imports of Chinese steel, of all silk cloth from China and India in 1730. So it took a long time for, all we hear about is this great Cartwright spinning jenny and so on, so all these so-called innovations that made Lancashire succeed. But all that was only possible because they had banned imports of Asian cloth.
Which could have been competitive on the labor basis easily.
So they removed that competition, and then 50 years later, they were able to start producing, and they start innovating as well. Now, interestingly, even with that, as late as 1820, Indian cloth exports to the UK were still charged, 1820, 80% import duty, 80% import duty. So that, the protection went on as long as that. If you look at the US as it began its industrialization in the 1830s, and then again after the American Civil War in the 1865 onwards, there were significant tariffs in place. Germany began its industrialization with tariff protection. So it is not that tariffs do not work. Tariffs do unfortunately work, but what they also do is that they raise domestic costs of production. And so if you increase the cost of producing steel in America by imposing tariffs, then the cost of producing cars will go up because cars will use that steel and aluminium. The cost of producing Boeing aircraft will go up because of aluminium. So that will happen. So you have to impose tariffs on cars as well. And that's essentially what he's doing. So he is going to see some benefit in the form of better manufacturing output in the US. I mean, the latest number for steel output I haven't seen the July number, but June number was up 4.5%. So modest increase, 4.5% year on year. Year to date, only about 1%. But you're already beginning to see some positive impact from the tariffs for the US. But it's a negative impact for everybody else.
But can you extrapolate this and say that the American economy hence would be stronger?
I don't think so. Unfortunately, I think the American economy will probably be weakened by some of this. It'll be weakened partly because it is protecting uncompetitive producers, right? Producers who are otherwise uncompetitive. But if at the same time they really make it difficult for Chinese dumping to continue, then the financial system in China will come under much more strain. And if that happens, then China would probably collapse before the US does. So, but the point is, a 30% tariff on China isn't prohibitive. It's 30% compared to 15% in Korea and Japan. So it is quite likely that the Chinese will be reasonably competitive. They'll continue to lose market share, but they won't be completely priced out. So this is not the end of the game for China, but eventually, I think the U.S. tariffs on China will go up because China is unlikely to give in.
What would be the path for India to take its economy forward in this scenario? We do not have the kind of leverage that China has against tariffs.
Yeah, so
we are vulnerable.
So my view is that we made a big mistake. We made a mistake by not doing a deal with the US before the 1st August deadline. And the simple reason is this. I mean, if you look at it from a pure economic standpoint, okay, if I was a politician, I'd probably say something different. But I'll come to that in a minute. But first, let's just look at the economics. The economics is like this. India is a very competitive producer of agricultural products. We are a big net exporter of agriculture. We are a net importer of manufacturers. We are a big net exporter of agriculture and net exporter of services. So, where we are competitive is in agriculture. So, if you look at rice, we're the world's biggest exporter of rice. Wheat, in some years, if we allow wheat exports, we become the world's largest producer of wheat. Now, there are some areas where we are uncompetitive. So, edible oils, we should not be producing palm oil in India. We should not be producing, trying to produce soy oil and all this. It's much easier to import those from Malaysia, US, etc. But dairy, we are extremely competitive. I think our dairy costs are way lower than US or most other countries. Perhaps New Zealand is more competitive than us, but we are next best. I find that Amul and Mother Dairy and Nandini here, I mean, the quality of dairy products is far superior and the cost is negligible. I mean, Indian costs of production for almost everything are very low. So we should not have feared opening up our agriculture and dairy markets to the world because we'd be very competitive in them. And the benefit of signing a deal with the US. Remember that on 2nd of April, the tariff rate imposed on India was 26%. On Vietnam, it was 36%, and on Bangladesh, it was 40%. Okay? So all those countries are going to pay much more than us. China is going to be paying much more than us. So why it makes sense to to sign a deal with the US is that we allow in some of their agriculture products, perhaps, we compete, we get some cheaper farm products from them, but the benefit to us would have been that we would be able to massively expand textile, garment, shoe, toy, processed food exports to the US because we would probably have faced a 15% tariff versus 20% for
The other countries around
for
us.
Vietnam, 19% for Indonesia, etc. So we'd have faced a lower tariff rate, and the benefit would be huge. It would amount to millions and millions of new jobs that could have been generated. So I think, from a pure economic standpoint, the right thing to do would have been to sign on with the US.
What went wrong?
From a political standpoint, had we done the farm reforms of
the 3 years back,
4 years ago,
yeah.
then we would have no problem with opening up agriculture. The failure to do the farm reforms has meant that some of the inefficiencies of the agriculture sector have continued and been deepened further. And for the Prime Minister to be seen to be allowing imports of many more agricultural products is probably, to be seen as anti-farmer. And he has taken that stance, unfortunately, and, that makes it very difficult. Now, we are going to suffer significant consequences because, in terms of the economy, we've just had 7.8% GDP growth in the latest quarter, 7.4% the previous quarter. The economy is probably going to do reasonably well. We'll probably grow close to 8% this year, despite these tariffs. But to me, 8% is not acceptable. 8% is coming after 6.5% last year. So we generally do about slightly less than 7 one year, or 7, or then 8.5 the next year. What we should be doing is 9 or 10% annual GDP growth, because we are now in the demographic dividend phase, which has only another 15 years to run. During those 15 years, we need to maximize growth and employment. If we can maximize growth and employment during that period, then we will become Viksit Bharat. If you want to become Viksit Bharat, then you have to maximize employment creation during these last 15 to 20 years of the demographic dividend. And that means having access to the US market above all. Because it is foolish to talk about getting friendly with China. Firstly, China doesn't want to be our friend. Okay. Now, we still go begging to be their friend. All the time. Since 1950, we've been doing it. It hasn't worked. Now, the point is, we export about $15 billion a year to China. To the US, we export $91 billion, more than 6 times. To Japan, our Prime Minister is in Japan. Japan is potentially a great ally of ours on many different fronts. It can supply a lot of capital, it can supply, it can give us access to better technologies and things like bullet trains, and semiconductor equipment, semiconductors, all of that. Consumer electronics, there's great potential for partnership. But look at our exports to Japan. They're $7 billion a year.
That's all.
So can Japan and China together be an alternative to the United States? No. So, I think that we should have signed, purely from an economic standpoint, we should have. Also, we must realize that this is not a normal American administration. We were negotiating with a team led by the Commerce Secretary, the Trade Representative, etc. And we thought we are very close to a deal. Even Trump said on 8th of July, we are about to sign a deal with India. On the 27th of July, the EU signed up, Korea signed up, Japan signed up, Vietnam signed up, Indonesia signed up, Philippines signed up. India did not. Trump had said 1st of August is the deadline. He's the only one that counts. You see the, pictures of the videos of the cabinet meetings. All the cabinet ministers are sycophants. I mean, they make Indira Gandhi's cabinet look like people with real large chests. I mean, they're all kowtowing to the president. All trying to outdo each other in praising. I mean, it's like he's a medieval monarch. So, given that he's the medieval monarch, he is the president of the United States for the next 3.5 years. You have to deal with him. And it's pointless criticizing him and saying he's a venal guy. Oh, yeah, he is. But he's the president for the next 3.5 years. You've got to deal with him. He said 1st of August is the deadline. We can't have mid-October as the deadline for a bilateral trade agreement. By mid-October, the world would have changed. And it is changing, even as we speak. So I think it's most important to try and sort this out. Unfortunately, it's not going to be sorted out anytime soon. We are going to suffer. Now, the economy is not going to get that badly hit because exports are not that important for the economy. But where we really are missing the cream, the icing on the cake. We're getting a cake that is fine. It's a good cake. The icing really makes it tastier. That part we are missing out on. And the icing, might not be healthy, but actually the sugar rush that you get from that gets you to do even better.
Sentiment becomes better.
So now the point is that had we been able to generate the extra 2 million jobs in labor-intensive manufacturing each year, that would have been far more transformative. And besides, America is much more our strategic ally than China can ever be. And so, I think we've made a very unfortunate error of judgment from an economic standpoint. And unfortunately, of course, the Operation Sindoor situation complicates the position even further because of what Trump keeps claiming. But so I think that there are good reasons for the position that India has taken, political reasons, but the economic logic would have suggested that we should have done it. We should have gone for the deal before 1st August.
Given that we are in a situation of our own making, we could have dealt with it better, but we did not for whatever reason. When different nations have gone through such defining moments, some have failed and some have gone up. And when it goes down, it becomes very difficult to correct it, given the macro nature. When we are dealing with our wealth portfolios, our investments, then does it make sense to see that we have different geographies as our investment bucket? Or is it still, you think that, no, India is still the best place, sare jahan se acha?
Well, in Japan, there is a whole theory around this. There's, when there was a time when Japanese interest rates were near zero, and the yen was depreciating, and yet so-called Mrs. Watanabe kept buying Japanese equities, Japanese bonds. So there's a theoretical term used. It's called the Feldstein-Horioka puzzle. The Feldstein-Horioka puzzle explains why Mrs. Watanabe, no, it doesn't explain, it just refers to the fact that the typical Japanese investor kept buying Japanese assets even when there was no logic to do it. We don't need to be Mrs. Watanabe. Mrs. Singh or Mrs. Reddy or Mr. as well can logically continue to invest in India. For the simple reason that India, if you look at emerging markets, emerging markets have provided very poor returns relative to developed markets
Last decade.
over the last 30 years, with one exception, India.
India.
India and the reason for first reason is that Indian private corporate sector is efficient. There's a lot of competition in most of the sectors, and that competition ensures that only the better performers do well, get listed, and continue to do well on the equity market. And so if you look at the overall growth of earnings per share in India over time, it's been consistently pretty decent. Even relative to that, I have to say that we are now quite overvalued. Indian equities, I'd say, are now significantly overvalued. Despite being overvalued, though, they're generally going up before this episode. They were going up for the simple reason that we have created a mechanism where private savings are coming into equities in a big way. And that basically, the SIPs and so on ensure that mutual funds continue to receive substantial inflows, and that is what keeps the equity story going. Now, if I just look at the logic of what is happening now, real GDP is going to grow about 8% this year. Nominal GDP is going to probably go about 10.5%. Relative to the rest of the world, this is still going to be one of the best, not one of the best economy around. All of that is probably reflected already in equity valuations.
Pricing, yeah.
Equity valuations already reflect that, but you can't see too many alternatives to this in terms of the quality of growth and therefore the likelihood, the quantity of earnings per share growth. And all I would say that over the next 2 or 3 months, I would prefer to be in a more defensive equity portfolio. I'd be looking at more dividend-paying stocks.
High quality balance sheets.
Yeah, basic quality balance sheets, absolutely. You have a lot of good dividend-paying stocks as well. Look at those and probably increase the bond portfolio, the fixed income part of your portfolio, but also because inflation is low and is going to stay low in India for the next 6 months at least, which basically means that there's a lot of scope for the RBI to cut interest rates substantially further. So that basically would improve returns on
the
fixed
bonds.
income. So I'd say fixed income is an important part of the story. Should be, weights should be higher in fixed income in India for now. And I think that by about November, December, some modus vivendi with the US will emerge. It will not be as good a deal as we could have got before 1st of August, but I think it will not be a 50% tariff. It may even be lower than 25%. So the point is, the final resting place of the tariff
numbers to be
will
seen.
be somewhere around 20%. And when that happens, we are back to at least normalcy.
Good cheer again.
And over the medium term, over say a 1.5 2 year period, India will face lower tariffs in the US market than China. In the meanwhile, we'll probably gain market, our exporters will probably gain market share in places like Europe and so on, because they'll be forced to compete more. Yeah. We'll probably get more reforms of our domestic economy that help to improve our prospects in third markets. So all that is going to be good enough.
It's actually good.
But in the near term, over the next 2 or 3 months, I would stay relatively defensive, increase weight for gold and fixed income in the portfolio, reduce the weight for equities, and particularly equities that are volatile, not paying, not yielding income in the form of.
You spoke of gold, and of course, everybody knows the story of gold.
Normally, I'm not in favor of gold, but in India, of course, gold is a big favorite.
Yeah, but globally, it has done well.
It's done very well.
Yes.
It's done very well because of the expectation of inflation. And I think it's also done well because most economic commentators don't understand monetary economics, sadly. They look at the wrong thing. They look at central bank balance sheet size, or what is called the monetary base, rather than money supply. So if you really look at the period from 2008, global financial crisis, September 2008 to 2019, M2 growth in the US never exceeded 10.4% year on year in any month. And in fact, it was generally in the 6 to 8% range, which is not unusually rapid. So the central bank balance sheet was growing very rapidly. That's called, the monetary base was growing rapidly, but banks were being very cautious. So banks weren't allowing the money multiplier to operate normally. They were holding excess reserves. And so M2 growth was low, and you didn't have much inflation in the US. So there was an expectation that inflation would go up. Whereas, interestingly, during the Biden presidency, inflation did go up a lot because M2 growth was between 13 and 22% every month from April 2020 to February 2022. So you had much more rapid monetary growth then. And so anybody who looked at M2 growth would have been able to tell you that you're going to have very high inflation during that period. And you did. Even the Fed was missing this because unfortunately the US Fed has stopped following M2 altogether. It's stopped following M2 growth as an important measure. So most of us old timers, and there's some fixed income fund managers in the US who were surprised that people were ignoring money supply. They were ignoring growth of money supply, and therefore missing the fact that inflation is going to stay very high. So if you look at M2 growth right now, it's about 4.5% in the US. So I'm not surprised that there hasn't been that much inflation since Trump became president. But the other reason why there hasn't been inflation after Trump became president is because oil prices have come off.
Yeah.
One of the first things he did was he opened the spigots for oil production, and oil production has kept headline inflation down. Oil prices are just over $60 a barrel. They were $82 a barrel when the election happened last November, and that has helped. Now, the simple illogic of what Navarro, the
Trade
advisor
Secretary,
to Trump, is saying, if India stops buying oil from Russia and nobody else takes India's place, then oil prices will go up sharply and kill the Trump agenda. So, what is now happening with India with regard to 50% tariff is completely illogical. There's no real reason behind it. But we are dealing with a situation that is unique American president, and I think it's pointless lamenting his personality. We have to deal with it.
So, see, gold picked up popularity when the Ukraine war broke out, and suddenly Russian assets were frozen, right? And the countries were worried, at least the global south was worried, that their assets could anytime be confiscated by the US or Europe, and they reduced their holdings in dollar and bought gold instead. The situation has not improved at all. It's worsened.
So this the expropriation of Russian assets is a terrible idea. And what is interesting is that the expropriation has not been completed. I'm astonished at European politicians who keep saying that this should happen. We must take the Russian assets and use them to finance the Ukrainian war, etc. Finance Ukrainian military spending, etc. Now, the point is that if you go down that road, you are really doing permanent damage to the concept of property rights. Now, when the Bolsheviks expropriated expropriated property in Russia in 1917, 18, 19, that period, those who held on to those papers began to sue for the return of those properties after 1990, after the Soviet Union had fallen. And in many countries, not just in the Soviet Union, but also in what used to be Czechoslovakia and Poland, etc., they actually got some of that back. And for a capitalist country to expropriate property is really damaging to the long-term stability of the currency and of the system. So I'm pleased to see that the Americans have stopped short. They've used the interest rate from the Russian assets, but they haven't taken the final step of expropriating the assets altogether. Because once you do that, then other countries will begin to worry.
Yes.
So, for instance, if the United States freezes we have foreign reserves mainly held in US dollars. So, if the United States freezes our ability to access the US treasuries that we own, that our central bank owns, that's a very serious step. In the past, that would be tantamount to war, in fact.
Right.
So
that may not really happen.
Those are steps that even a mercurial guy like Trump would be willing to take.
So there's been this talk of having stable coins as another neutral reserve. I mean, there's not enough gold, there's not enough silver, there's not enough euro to replace the dollar, and there's talk of crypto. What do you think?
Well, I think that crypto is a complete scam. So, if you have invested in crypto, I would say just watch out. Now, the thing about all these crazes is that, you had the tulip bulb craze, and so there have been these phenomena. And when you talk to professional investors who actually buy cryptocurrencies, professional investors say, well, we are participating, but we know that this is
a scam.
That they're participating as long as it's going up. During the dot-com bubble, I remember value investors. There were value investors who avoided participating. Unfortunately, those value investors, they underperformed for the equity market so much that they lost their jobs. Some of those value investing firms closed down. They were right in the end. By September 2000, they were proven right. But by then, they'd lost their jobs and their company. The fund management company had ceased to exist. So, to participate in the markets, you have to go along with the facts. But you have to be very nifty about getting out at the right time.
Which is tough.
It's a difficult thing to do. But to my mind, compared to .com, bitcoins and cryptocurrencies, I mean, Bitcoin out of all these cryptocurrencies, one might emerge successful. One. But many of them will be scams. And so I personally have never invested in a cryptocurrency.
But stablecoin is supposed to have the backing of an asset. It could be the renminbi or it could be the US Treasury.
Well, then it's not if it is backed by another currency, then it's just a form of currency.
Yes.
So then calling it cryptocurrency is
just a digital currency. So the US is looking at this as a new form of raising money, right? Because
not the US, Trump.
Trump. I don't. Okay. We don't equate Trump to the
Trump family. Trump family, yeah.
Yeah.
Yeah. So, I mean, good luck to them. Yeah. Good luck to Pakistan. By the way, on the 26th of April, 4 days after the Pahalgam terrorist attack by Pakistani proxy, World Liberty Financial, a company that is owned by 3 sons of Donald Trump and 1 son of Steve Witkoff. Steve Witkoff is the is another property tycoon who is Trump's special envoy to the Middle East and special envoy to Russia. So one of his sons and 3 sons of Donald Trump owned World Liberty Financial. World Liberty Financial was found on the 26th of April in Islamabad. And the Prime Minister's Office of Islamabad put out a press statement saying, World Liberty Financial, a company owned by President Donald Trump of the United States, has come and signed a deal with the Pakistan Crypto Council. This is a pure bribe. I mean, this is a pure bribe to the family of the President of the United States. And it's worked.
And it worked.
It's worked remarkably well. We are not going down that road. And we might have to pay a price for it. But, in the end, the logic, I mean, there is no comparison between what Pakistan has to offer and what India has in terms of strategic offerings and in terms of economic offering to the world. So, in the end, things will sort out. But we've been totally blindsided. I must say, I was blindsided by it. I didn't notice this until 14th of August. I now have a picture in my phone of that press statement from the Prime Minister's Office, Islamabad. I don't know how many people noticed it at that time, but
we did. Yeah.
I think even the Indian government was blindsided. But that is a remarkable. It's a remarkable way to do statesmanship in today's world.
But as a democracy, I don't think we can.
We're not going to do it. I mean, we're not going. So even in the first Trump administration, India did not bribe him. A little bit of praise, yes. There was some praise, but not open bribe. I mean, unlike, say, China. China is willing to give deals to
the family.
You know what Vietnam has agreed to do? Vietnam has removed various villagers and given Trump a
property,
a golf course.
Wow,
outside Hanoi. So, I mean, this sort of, this you can do in a communist country perhaps, but
not in a democracy.
You cannot do it in. I mean, you can't do it in an obstreperous democracy like India.
Yeah.
Other places.
Any questions from y'all? Most welcome to Prasenjit. Sujit is there.
And would you think that the current taxes on shrimp, would it affect India's thinking, and would they open up agriculture or a portion of it because of what is happening to the shrimp industry?
About 40% of our shrimp exports go to the US, 30 to 40%, somewhere between 30 and 40%. So that industry is going to suffer very severely from these new tariffs. And I don't think there are too many alternatives. So unfortunately, these are some of the costs. These are some of the serious costs of not having had done a deal with the US. We are definitely, I mean, the shrimp industry is going to suffer. Maybe the cost of shrimp in the domestic market will go down quite a lot because some of this will have to be sold domestically. There'll be a oversupply of shrimp in the domestic market. But I love shrimp, so if that happens, I won't be
you buy more shrimp.
But the simple fact is that shrimp producers will suffer. There's no doubt about it.
There is going to be pain, and we cannot avoid pain in any of these gems and jewelry and textiles.
Gems and jewelry. Already, gems and jewelry was suffering because there are so-called lab-grown diamonds and so on, which are reducing the demand for
The natural diamond. Yeah.
natural diamond jewelry. So you're already beginning to see quite a lot of pain in the gems and jewelry sector over the last 2 or 3 years, and this will be even more painful. There's no doubt that, so a number of labor-intensive export sectors are going to suffer, which is why I think it's really, and interestingly, shrimp is part of that agricultural sector that we're seeking to protect.
Mr. Prasenjit Basu, I'm Balachandra here. We had a fantastic presentation from you, and first of all, thank you for it. I have two questions actually. Now, this tariff is something we have to live with, and the good and bad, morally, there is one aspect, and economically, you have another aspect. So, what is it going to be, according to you, is a worst case scenario? Is it going to be in specific industries, or is it going to be across? And the second question is, if you see a worst case scenario in a certain way, what do you think government should come up with? What should be their regulations, or like the GSTs for one which they are doing? According to you, what do you expect from the government? Thank you.
Well, what I expect is different from what is likely to happen. I think let me just focus on what is likeliest to happen. First of all, the impact will be significant on the labor-intensive manufacturing sector. So textiles, garments, shoes, toys, gems and jewelry, shrimp are going to be affected, right? Significantly. So far, so you asked about worst case scenario. To me, the worst case scenario is if these tariffs are extended to iPhones, for instance. In the last quarter, almost all iPhones sold in the United States were made in India. This is a remarkable change. And this is a very delicate situation. Trump is very unhappy that the iPhones are now being shifted from, iPhone production is being shifted from China to India, has been shifted to India, and Tim Cook is open about it. He says at his results announcement just a few weeks ago, he said almost all iPhones produced, almost all iPhones sold in the US were made in India. Now the interesting thing is that for Apple, India is also an important market. So we are now where China was for Apple, say about 8 to 10 years ago. In terms of value, Apple, I think, is already number 2 to Samsung in India. In terms of value of sales of phones. In units, it's about 5th or 6th. It's quite low down. But in terms of value, it's already second or very close to being the number 1. And that can only increase over time. Therefore, Tim Cook is trying to keep Trump on side. So interestingly, Apple is investing, has promised to invest, I think, $150 billion in the US in order to ensure that India can continue to be the base for manufacturing of iPhones sold in the US. That's a remarkable situation. But if we lose that, if we lose access to the US market for iPhones, even for 3 months, that is really worst case. Because if we lose it for 3 months, we lose it forever. Apple will go. I mean, Apple will substantially reduce its production in India. It will produce only for the Indian market. That's a much smaller story than producing for the US. And the prize for India really is that they'll go from producing from the US to producing for the world. Over time, once you can scale up, unit costs will start coming down substantially in India, and the ecosystem of component manufacturers will increase in India, and that will basically generate millions of jobs and create a whole ecosystem of component manufacturing, etc., that will be transformative for the Indian economy. Losing that is the worst case scenario, and I think India needs to. That is why what we are seeing at the moment is that there are people shouting on TV, abusing Trump, but the government is very quiet. They haven't taken any retaliatory measures. India could take a lot of retaliatory measures, but it hasn't taken a single retaliation. It hasn't retaliated by making it more difficult for US exports to come into India. And I think that is the right thing to do. Keep a low profile. Don't get Trump more upset. And quietly negotiate behind the scenes to have modus vivendi that works out.
Reach some kind of a deal.
Yeah, at some point. The so-called bilateral trade agreement of October, that'll happen. Now, so hopefully that, the worst case will not happen. See, about half, nearly half, about 40, a little over 40% of India's exports to the US are still exempt from the whole, so pharmaceuticals. Generic pharmaceuticals are, about 40% of all generic drugs sold in the US come from India. There are alternatives to India, but the alternatives are more expensive. You can get a lot of that comes from Israel as well. India and Israel are the main suppliers. And India is really good at this. But, if they really, India can do a lot of other things. I mean, if they really stop Indian generics from going into the US, then we can go back to the pre-1994 patent regime and, go back to not having, going back to a situation where we don't have product patents, we only have process patents, and then start supplying cheaper pharmaceuticals to the rest of the world. The rest of the world would applaud. So we have alternatives, but at the moment, we are not using all those. For instance, we could retaliate by doing what China did to Facebook, Google, Amazon. They're all banned from China. And China has used that ban on Facebook, Amazon, Google to develop their own alternatives. Baidu, Tencent, etc. are now, their valuations almost, are among the highest valuations of any Chinese company. So they have shown that getting rid of this stuff works. This is an interesting example of the Nayara Energy,
The Russian oil refinery.
Oil exports. We basically import crude from Russia. We process it either in Reliance or Nayara Energy. And Nayara Energy is owned by Rosneft of Russia. So, interestingly, around 3 or 4 months ago, Microsoft suddenly cut off Rosneft's, Nayara Energy's, Nayara Energy's email and all its access to Microsoft products. And in this country, we have there aren't too many alternatives. So they went to Redef Mail.
Oh.
They had to go to Redef Mail to restore access to email.
Wow.
Nayara Energy. So now the point is that after a few weeks, Microsoft relented because Nayara went to court here, and I think they went to court in the US as well, but certainly in India, and Microsoft was going to lose the case. So they quietly restored access. But the point is that those are the sorts of risks that emerge. We have alternatives. So we have ways, Amazon. So India is the biggest market for Facebook in the whole world. Biggest. We are the second biggest market for Google in the whole world after the United States. First is us. Amazon, we're the fifth biggest market in the world. So if we do a China to them, it'll be, it'll have an impact. Facebook stock price will probably decline 15% in 2 days. No, I mean, it's not a disaster for America. It'll have some impact. So now the point is that are we shooting ourselves in the foot by doing that? I think we are. So it's best to keep a low profile and recognize that America is our friend. We are part of Quad. The Indo-Pacific is a term that Donald Trump introduced in his first term. I think it makes much more sense for us to work out a deal with the US as soon as we can, even if we don't let them significantly come into our agriculture sector. And I think on agriculture, apart from what I said, GMO,
which we don't want.
Genetically modified crops, particularly for edible products, are problematic. And now the thing is, Japan has signed up to allow American agriculture imports.
That was a very sensitive point for them.
You see, Japan, rice, the cost of producing rice in Japan is 7 times the world cost of production. 7 times. So, if they really allow American rice or Indian rice to come into Japan, that'll be, the Japanese consumer will benefit.
Yeah.
But will they allow it? I can guarantee you that they've got some non-tariff barriers, phytosanitary standards. They'll say our intestines cannot digest this, whatever it is. Something will emerge, and they will not let it happen. So that is basically how trade is done. You just hold it off for a while, and this is where I think we made a bit of a mistake by getting onto this high horse. We should have just signed up and then used phytosanitary standards, religious reasons, whatever, for not allowing GMO.
Yeah.
Sorry, the elephant in the room is why nothing has been done to our services exports. And that would really, it's 10 times worse than what was going on with our goods exports. And logically, why hasn't he gone after that? Because that also would, just stop that, increase employment in the US. Why is he left that element completely open? There must be a reason behind it.
Yes, I think, first of all, American companies benefit much more from having access to our services exports than they do from having access to our manufactured exports. Simple fact. Our manufactured exports are in niche areas. Services exports are essential. The services exports keep the cost of production costs down for American users. So if they start making that difficult, they hurt themselves. Now, can America replace Indian services exports with their own? Almost certainly not, A. B, I think what you hit upon is the nub of it, that America doesn't want to really hit us too much. The rhetoric is really bad. And we, on TV we are ratcheting it up. Sometimes I've also participated, ratcheting it up. But, the point is that they are not doing too much more. So H-1Bs, for instance, they are making it a little more difficult to get H-1B visas for Indians. Fine. But the ultimate step is if they say, if they put barriers on our services export. That they're not doing. So I think they're letting it continue because it is essential. There is really no alternative to India. So if you look at, the alternative is the Philippines, for some
The
of these services.
BPO services.
Not only for a small part. I'd say about 15 to 20%.
The very low value add, the very bottom.
But the Philippines, you look at the Philippine export, they're all done by Indian companies. The Philippines BPO sector, it's all India. You go to Manila, you'll find TCS has a 20-story building there. Infosys, another 15-story building. Full Filipinos doing work for Infosys,
All right.
TCS. So there really is no alternative. Now, the one thing is that over the last 35 years, we have become indispensable. Our services and exports have become just as indispensable. Now, if you look at manufacturers, the reason why Trump has scaled it down from 150 to 30% is because American companies are lobbying on behalf of China. Not just manufacturing companies, Wall Street. I said this many years ago to people in government as well, that Wall Street makes no money in India. Goldman Sachs has no presence in India. Morgan Stanley has almost no presence. And why? Because our guys, what is interesting is that ICICI Securities, etc., have no distribution capacity in the West. It's really remarkable. I've worked for many Asian companies. I've worked for Swiss, American, British. You have to have distribution capacity in the main markets, right? So all of them do. But the Indian ones, ICICI Securities, one salesperson in the US, one in the UK. Hey, no, not even one. We had half. We had half a salesperson. He was sitting in Bombay and selling into the UK. So I'm just amazed. Okay, but when there are IPOs, every IPO ICICI Securities is there. Everyone. So and the foreign ones, maybe UBS would have one of the 10.
A tiny share in the IPO.
I mean, so we don't have enough people lobbying for us in the West and in the US. Whereas Goldman Sachs took a stake in one of the 4 banks in China. Goldman Sachs CEO, after he retired from Goldman Sachs, went and joined Tsinghua University as became one of the guys, and he has worked for 15 years to make Tsinghua University world class. I mean, that is the degree of commitment that Wall Street people have to China. In India, Goldman Sachs was made a fool of by Kotak Mahindra. Kotak and Goldman got into a joint venture. After 10 years, Kotak became super wealthy and did really well out of it, that joint venture. Goldman made no money. The guy who was in charge of the joint venture never made partner at Goldman because he did a pretty poor job in India. Anyway, so the point is that you and I know who we talk about. So anyway, he joined Citibank later. Anyway, so the point is that we need to be able to have more more American companies lobbying on our behalf in manufacturing. At the moment, we have none. And also actually in things like finance. One of the reasons why India's rating, sovereign rating, is BBB. I mean, look at our public debt. Our public debt to GDP ratio is way lower than America's. America's AAA, we are BBB. We are very happy that we just got upgraded from BBB minus to BBB. Yeah. I mean, we should be A, at least A or AA. If you compare our external finances, we have current account near surplus. I mean, the latest quarter there was a surplus. Current account deficit of 0.6% of GDP last year. We have inflation that is really low. Our public debt is much lower than the US. much lower than every Western country, then why should we be triple B? We are triple B because we have never issued US dollar debt. Since you don't issue US dollar debt, S&P, we're not a client of S&P.
You're not a client of S&P.
We're not a client of S&P, we're not a client of Moody's. Our rating is an academic rating. There are no fees that they are collecting from us. They're collecting fees from China. They're collecting fees from Indonesia, Korea. So they give them better ratings. It's simple. It's a logic. It's a two-way thing. So, unfortunately, our bureaucrats are very academic in their orientation. Our advisors, most of them have no experience of financial markets. And those who do are not really running things. So, we have, the Prime Minister's Council of Economic Advisors. There are some people with financial sector experience, but they meet once every 2 months. PM hears them once every 2 months. But that's just one voice. What he hears every day from the bureaucrats are people who have academic orientation.
So we should be opening up capital markets.
We should
the
allow
other
more of a presence for the global players.
They should be allowed a stake in the
if we
Indian
do
economy.
that, the cost of borrowing will go down. The costs of borrowing will go down because there'll be more competition for our local guys. There'll be better distribution of Indian equities. Indian equities are already popular among the specialists. So Indian specialist investors are now almost entirely based in Mumbai and in Singapore. There are hardly any now in the US. But the point is that non-specialist investors should also look at India, because this is really an opportunity. An equity market that is outperforming most others should be looked at as a diversification opportunity by the typical fund manager who's not a specialist.
True.
So in order to do that, we need to be able to, we need to give more opportunities for.
Not make it tougher for them to come in.
It's simply, so if you look at, say, our car market and our motorcycle market, there's two. In the motorcycle market, in the 1980s, we had Yamaha, Kawasaki, maybe in joint ventures. I remember in college in the 1980s, Yamaha, I never rode these things, but Yamaha, all these guys were around.
They were quite popular.
And they were, so as a result, by the late 1990s, we were the biggest producers of motorcycles in the world.
True.
Highly competitive market, very competitive. Japanese guys competing against ours. Then Hero Honda became a joint venture, became the world's biggest manufacturer of motorcycles. And then they split up, and now Hero is competing with Honda to be the world's biggest, even now. Cars. We had Ambassador, Premier Padmini, almost museum pieces. But then Maruti came in. What is interesting is that after 91, Indian guys like Tata and Mahindra entered the place, and it took a long time for them to become competitive. But now, with EVs entering the story, suddenly, in the EV segment, Tata and Mahindra are ahead of Hyundai. Now, Hyundai has an Ioniq that it's producing primarily in Indonesia. So it has a product that it makes for the world. It's trying to, it has entered India with that as well. But it is being outsold by the Tata and Mahindra products. So until EVs emerged, Tata and Mahindra were well behind. They were third and fourth, sometimes fifth, sixth. But because EVs are a disruptive technology, suddenly that has opened up the opportunity. And Finally, we have two Indian car companies that are, my dad says, don't, I bought a Tata for him many years ago, Indica. I said, terrible, terrible car. But now I have a Tiago for him, EV. He says, this one is damn. He's 92, but he says, this one is something, So anyway, so the point is that this disruptive technology has introduced an opportunity. But if you have a more competitive domestic market, that helps. In cable TV, now we have a duopoly. The third, Tata, is far behind. But, Airtel and Jio, it's not good. I want there to be at least 3 more competitors. If you have only 2, then they take advantage of you. During the test series that was going on in England, because of Jio was blocking my access to Sunil Gavaskar. Sunil Gavaskar was on Sony. I could not watch. My Sony feed only had women's cricket. So this is a monopoly situation.
Yeah.
They are disrupting. So what you really need is more competition.
More competition.
The more competition you have, the better the offering to the consumer. And ultimately, the more competitive you'll be internationally as well. Now, of course, cable or whatever, TV, streaming is a domestic regulated market. And therefore, this is a market where more competition has to be almost forced. Whereas internationally facing sectors like cars, motorcycles, if you have more, so I mean, you see this with Japan. Japan, there were 8 car brands. There was Toyota, Mitsubishi, Nissan, Honda, Isuzu, Suzuki, Daihatsu, all these names. You're competing heavily domestically, and then 3 or 4 of them became international players. And so, hopefully, we had that with motorcycles. We didn't quite have it with cars, but over time, it's emerged. And the point is to now force some of these, cars and so on to become international
quality,
and become, export oriented, especially in EVs. Compete with the Chinese. Don't let them have the field for themselves. I have 10 minutes with you. Only thing I'm going to talk about is GST. Everywhere else in the world, you have a single rate of GST or VAT. VAT is a single. The reason why you have a single rate is for the simple reason that GST exists to make evasion of tax almost impossible, and to make collection a lot easier. So, when we introduced GST in July 2017, it was a big advance on what came before it. What came before it was a whole system of different sales taxes in different states, octroys for cross-state borders, etc., and an absolute hodgepodge. So compared to that hodgepodge, we moved to a better system, no doubt. But frankly, I had been watching this for years and saying, every year, we're talking about having a GST or a VAT at the end of the thing. But every year, the excise duty structure in our budgets, 2010, 12, 14, 16, there'd be 4 rates, so many exemptions, and I am now moving kitchen hobs to this section and kitchen utensils to this. I mean, I just wonder, I mean, if you're going to have a GST, aren't we going to have one rate? So in the end, I was shocked that we had 5 rates and hundreds of exceptions. That destroys the whole point and purpose of a GST, which is simplicity, ease of collection, and near impossibility of evasion. If you have exemptions like this, then basically you are creating a haven for bureaucrats. Bureaucrats every year will be able to say, sir, madam, this one you could move up to this one. This one you move down. And so it basically empowers bureaucrats and does nothing for the economy. Therefore, if we are now going to move to 2 rates, that's fantastic. I would prefer 1. But 2 is second best. At least we are going to the second best option. Unfortunately, it looks like there'll be 3. There'll be 140% rate. So I can tell you, our bureaucrats win always.
Keep
No
that
matter,
astra.
good idea, how to kill it. Yeah, they know. So, yeah, I would like to see 2. This third rate of 40% is nonsense. So, Arun Jaitley asked me, he said, yeah, but what do we do about luxury? I said, if it's a luxury item that you want to tax separately, you call it something else. You don't call it GST. GST is collected single rate, and if you want to have some luxury tax, that's something else. That's not called GST. For GST, there should be a single rate. So we're now going to have 5 and 18, I think. 5 and 18.
Yes.
Fine.
And a 40.
Better would be just a single 16% rate. Finished. But 5 and 18 is a huge advance. But you see, the point is that you can still have ambiguity. A product that is slightly different would have an 18% rate. Then you can evade, you can mess around. So it's not the best. Best is to have a single rate. But anyway, what I'm some long answer to a simple question. It's good. It's very good. I'm glad it's being done under pressure. I would hope to see only 2 rates, if not 1. That third rate should not be there. But apparently only about 12 products will be in that third rate. So just call it something else, don't call it GST.
I think we'll take more questions.
So, but the point is that
Prasenjit.
this year, in any case, we already had substantial reduction in interest rate. We've had substantial reduction in income tax rates for everybody who pays income tax. And now we have a reduction, an effective reduction in everybody's GST. So, 3 ways of boosting consumption. It's come at the right time, and very good. But we, I think, quickly need to work out a deal with the US. I mean, the longer we delay that, the damage can be long-lasting for our exporters. And you see, the point is, I keep saying that we have 15 to 20 years left of our demographic dividend. We should just keep our head down and make sure that we can generate millions of jobs.
Yes.
That is the primary, that has to be the primary focus. And people moving from agriculture to labor-intensive manufacturing. The productivity, average productivity in labor-intensive manufacturing is about 3 times average productivity in agriculture. And if you take a journey through rural India, there's nobody working in the fields. Whole country is supposed to be working. 40% of our population, 42% is supposed to be
in the agri.
Just spend most of the time at home. You don't have to work most of the time. You plant.
It rains and grows. Yeah.
You finish. So we have massive underemployment in agriculture. So if we can induce them to come into labor-intensive manufacturing, it'll be transformative. It'll raise average productivity, and therefore it'll raise GDP growth automatically. So we need that, and losing 3.5 years is the worst case.
Is a lot.
We cannot, Trump is there for 3.5 years. And if, God forbid, something were to happen to him, J.D. Vance is going to continue.
Mirror image.
Slightly more rational. He won't say the same sorts of things. He has an Indian wife. There's some good things.
They're not going to work. Yeah. Yes, Arjun, you've been waiting. Yeah.
Yeah. So, good evening, sir. My name is Arjun, and my question is on the fact that we claim that India is the third largest economy in PPP terms, whereas in terms of GDP per capita, we're ranked 126th, if I'm not wrong, somewhere around that. So, how do you see this bridge? How do you think we can bridge this gap, rather, in terms of structural reforms, and in terms of the fact that individual wealth is still really low, and this GDP growth is vastly driven due to population increase in India?
First, I mean, GDP growth is not because of population increase. Our population is not increasing that much anymore. So, our annual population growth is about 1.2% now. So basically, per capita GDP, so the latest quarter we just had today announced, 7.8%. So that is 6.6% growth in per capita income, which is pretty remarkable. If you keep growing 6% a year per capita income, you'll double per capita income in 12 years. So we are actually doing pretty well. The simple fact is that at the end of British rule, we were the poorest country in the world. As late as 1990, if you looked at the World Bank, the World Bank publishes a World Development Review every year. At the back, they have tables, world economic tables. We were, even in 1990, the 10th poorest country in the world. 10th poorest. So you cannot go from being 10th poorest to richest in 50 years. It's not possible. Because everybody else is also going up. It's not as if others aren't growing. They're also growing. Their incomes are growing too. I think what is tragic about our story is that until 1990, we weren't closing the gap with the rest of the world faster. When you're a poor country, you should be growing much faster. Your per capita income should be growing much faster than average per capita income growth in the world, in order for the gap between you and the richer ones to start closing. So from 1947 to 1990, we didn't do that. But fortunately, since 1991, we have, and we have accelerated. Over time, we have steadily accelerated. And now, we are closing the gap at a faster rate. Are we going to become totally rich? No. But the point is that if we keep growing at, say, 7% per capita income growth every year, which I think is likely to happen, then every 10 years we will double our per capita income. And, by about 2060, that will basically put us where America is today. You go to America, can you imagine the typical Indian living the life of an American 50 years from now? Once you do that, then you're done. Now, some countries have achieved this. Korea, Japan, Taiwan have achieved this. China has not. But China has achieved it along its eastern coastline. So around 250, 300 million people who live along the eastern coastline have achieved this. They have reached developed status. So Asia Reborn, in my book, I was looking at why it is that the countries that were ruled by Japan for any length of time were the only ones in Asia that became developed. So, Japan ruled Taiwan for 50 years, from 1895 to 1945. In 1945, Taiwan's life expectancy at birth was 55 years. India's was 32 years. World average at that time was about 45 years. And Asian average was 41. India was 32. So my book analyzes why it is that the parts of India and parts of Asia that were ruled by Britain the longest are the poorest. So which are the poorest parts of India in 1947? Eastern parts of India and the southern coast. Right? Those are the parts that were ruled by Britain the longest. They are the poorest. Basically, the Brits looted us rapidly, especially in the first 100 years. East India Company time. And that loot is basically what made us poor. Whereas in Korea and Taiwan, the Japanese invested in industries. They created industries. So when Korea created Pohang Iron and Steel Company in 1970, they did it in collaboration with Nippon Iron and Steel, the Japanese company. And within 5 years, Pohang and POSCO was advising various American steel companies on how to improve their production processes. Why is this? Because during the time that Japan was ruling Korea, Japan had created 6 steel mills in Korea. So there were there were Korean engineers, there were Korean technicians who knew how to make steel. So when they did the collaboration with Nippon, it was quite easy for them to adapt the technology and build on it. Similarly, Hyundai was established in collaboration with Mitsubishi. Mitsubishi Motors, not even the top 3. No, Mitsubishi Motors. But when Nissan established its first car plant, its first car plant was established in what is now called Jilin province of China. Jilin province is 40% Korean, even today. So there were enough Koreans with some knowledge of car production, and they were also able to adopt the technology and improve on it and so on. Now, just like this, Nippon collaborated with a Malaysian company called Parwaja Steel. Parwaja Steel never made money in a single quarter. Some people said they never made steel. No, they made some steel. They made steel, but they never made profits. Whereas, why? Because poor Malaysia was under British rule. And at the end of British rule of Malaysia, there were no engineers, there were no technicians. In 1993, I went to meet the Malaysian, I was doing some work in Malaysia. And I met the science advisor to the Prime Minister of Malaysia. He was a lovely man. He had a very good conversation with me. But he was a vet. The science advisor to the Prime Minister was a veterinary scientist. He was the only PhD in science in the country. In 1993, they got independence in 1957. So there were no. So when Nippon Steel was collaborating with Parwaja, there were no engineers. There was nobody there. There were no technicians to be able to adapt the technology. So they couldn't do it. Similarly, cars. The Malaysian car company is called Proton. Proton has a terrible reputation among Malaysians. It's actually quite a decent car. I used to drive the Proton when I was in Malaysia, and it's quite okay. But similar problem. They could not become globally competitive like Hyundai did. Even though they collaborate with Mitsubishi Motors, also Proton and Hyundai collaborate with Mitsubishi Motors. So this is a pure experiment in economics. I said this is beautiful, pure experiment where exactly the same collaborators, different outcomes. So there you go. British colonialism was a disaster. Japanese colonialism was actually quite good. Now, the last point about Japan is that the parts of China that Japan controlled were the entire coastline. The entire coastline was controlled by Japan from 1931 to 45. 14 years. And that is where all the industrialization has occurred.
has happened.
But the original, the parts of China that Japan controlled economically for 40 years is called Manchuria. Jilin province, which is 40% Korean, Liaoning province, and Heilongjiang. That area is the industrial heartland of China. It is now called the Rust Belt. It's become the Rust Belt. But it was the heartland of China industrially from 1949 until the year 2000 at least. And that is where the Japanese built their industries. So,
The difference was really
so you know,
new to us as
Gurcharan Das,
investors.
my good friend Gurcharan Das, in his book India Unbound, he says in the introduction, sometimes I've done a thought experiment. What if Japan had ruled us? And then he says, no, thank goodness they didn't come. I told him, Gurcharan, if they had ruled us even for 5 years, our outcomes would be much better. Even if they'd done 5 years. And in fact, you know, the coast of China, only 14 years. I mean, some parts only for 8 years. But that was enough because you transform the mindset and you transform the, the skill sets through having an industrial base. Whereas the Brits, unfortunately, particularly when it was company rule, were only interested in rule. So anyway, my next book is India Reborn, coming out next month, exactly a month from today.
All right.
And that is only going to be about India. Okay? There'll be a lot of global history as well, but focus on India. And some of this stuff will be there. I hope that
Is
we'll
it going to
discuss
be
it at
launched
some
in
point
Mumbai
in
or
the future.
Delhi?
Huh?
Will it be launched in Mumbai or Delhi?
So I'll launch it all over. I'll hopefully come to the Bangalore
Bangalore,
Lit Fest,
yes.
but maybe too early for the Bangalore. Bangalore Lit Fest normally is at the end of October. Maybe next year.
Yes.
Marketing a book is a long story. We spend so much time trying to get people to read the book, but way more time than writing it, I think.
Yes, Anjali, please go.
Yeah. Thank you so much. Thanks for your time.
Thank you, Mr. Basu, for that very insightful, very thought-provoking conversation. So again, let's give Mr. Basu a very big round of applause for his time and his wisdom.
Thank you.
And now to express our gratitude and appreciation, I'd like to invite Dhruva Bhagavat onto stage to present a small token of thanks.
Yeah. Before that, maybe, Sanjit, something for you to carry home.
Thank you so much. Thank you.
Yeah.
Thank you. What a likeness of me.
Oh, yes. Go on.